Hey guys, Bill Soriano here from Pittsburgh, and today's Saturday, February 22nd. I wanted to do a little deeper dive into my weekly recap for February 15th that I posted yesterday, last night. This is supply and demand trading from basically from 4-hour supply and demand zones, which supply and demand zones are basically just order blocks. But very important before you watch this, if you haven't watched my supply and demand intro video right here, it's 12 minutes long. I'm going to put the link down below in the description because if you haven't watched this yet, you're kind of going to be lost. And then also down in the description, I'll have the link here to yesterday's video. I posted the weekly recap for February, the week of February 5th, 17th. I think I had a 2% gain on my account. I show you that in this video here. I'm going to try to put these videos all on one page here, but right now I'm just going to have the links down here in the description area of these videos. So if you haven't watched my supply and demand intro here, you really won't know what I'm talking about. You won't understand the strategy unless you're already an intermediate advanced trader doing supply and demand trading. So let's do a deeper dive into some of these that I showed yesterday. This is AUDJPY. And so I've gone back here to gone back to like I've just put this in replay mode to just show you these different supply zones that I have highlighted here, right? You have a supply zone right here, right? Try to make this bigger here. So here's your impulse candle, all right? Here's the candle right before that, okay? And then you could see that it leaves imbalance, right? The price action is inefficient. There's an imbalance there. And to find the imbalance, guys, you go to the momentum candle. You just go one candle back to the left. You only go one candle back. So you don't count these candles here. And then you use all the candles to the right to see if that imbalance gets filled. So you can see here, if I turn on the imbalance detector, which is a free Lux Algo indicator on TradingView, you can see right here that it highlights this pink area, this whole area here, from the wick of the candle below to the wick of the next candle. Now you can see that on the following candles, price does come up and fill part of this imbalance, but some of it is still left, okay? So if you have trouble finding the imbalance, on my imbalance detector, I have the bearish imbalance pink, the bullish imbalance blue, so you don't get confused, okay? So you can use that if you want to. Sometimes it's good for finding little slivers when you can't tell if the wicks are lining up or not, right? So we have imbalance there, right? We also have a liquidity grab. Um, the only thing we really don't have here is a break of structure. So this really isn't a good, wouldn't really be a good uh, supply zone to trade from until we get a break of structure. We do make a new low with the wick, but when we're trying to identify structure breaks and break of structure, change of character on 4-hour time frame to determine market direction or the trend bias, so to speak, we need bodies of the candles to close below those wicks. Okay. And we don't have that here yet. And essentially what we're looking for, so that's really not a good supply zone there because you don't have a break of structure. So then that leads us to the next one up here. You could see we just have that sliver of imbalance here. If we turn the detector on, you can see that little pink line here, there, showing a sliver of imbalance. So we have a supply zone here, and then more imbalance and another supply zone up here. Okay, so those are the supply zones we're looking at. And basically what we're looking for, and again, the other video will show you this in better detail, but we're looking for price to come once our supply zone gets hit. And let's just for right now, let's just get rid of this one because that's really not a valid supply zone. So once the supply zone gets hit, price is obviously moving up at this point, right? We've determined that the 4-hour trend is down from this movement here, the bias. But for price to get back to our demand zone, it kind of has to move the other way, right? And so we don't want to just get in a trade because our demand zone gets hit. There are some instances where we might, if we're in a clear extreme zone, right, the beginning of the move down or the beginning of the move up, a clear extreme zone. I'll show you one of those here in a minute, but there's not one here because obviously we have this other supply zone up here. So you're looking for price to move into there, and then you're looking for a change of character or break of structure going the way you want the trade to go. So you can see how price comes up, pulls down, goes back higher, right? You get a higher high here. So because of that, this is where your change of character would be, right? That low right there, price comes down, takes out that low there, which gives you your change of character, which is just a break of structure, another name for a break of structure, but it's going against the current trend. So it's called a change of character, okay? And so there you have it. And then now you identify a refined supply zone up here that you wait for price to come back to hit and then move in your direction. Now, sometimes price will come into your zone and it won't pull back and go higher. It may just come right down, break structure, giving you that change of character right there. Just show you that just in case you can't see it. Change of character there. Change of character there, right? Okay. And then sometimes it'll try to fake you out and it may do something like this, right? May come into the zone, pull back, go back up, but not break this high here, right? Then go lower, and then you may think that, and then it may go low, then come back and go down. So at this point here, right, you may think that you have a change of character, but you don't because you didn't make a new high here. So this is still your change of character right here. That's still a line that needs to be broken. It does get broken, right? Um, it does get broken, but and then you could get your refined zone right here, right? What may happen sometimes with that though is it may come up into the zone, come down, go back like that, then come down here, break structure of this, but that's not really a valid change of character, right? Just make this a little bit lower here. So here's actually your change of character down here because you didn't make a new high. So some people may now try to identify a supply zone, a refined supply zone here, right? And then of course what happens is they put in their limit order and then price just kind of shoots up and goes higher and stops them out. So those are a couple things that can happen. But let's just watch when we replay this here. Let's just put this in replay. See now price moves up into our zone here, right? It kind of moved up into that lower zone that we had highlighted before, but we said that that zone was no good because there was no break of structure. But then what happens is now you get that break of structure. So once you get that break of structure, this now does become a valid supply zone, right? See how price comes down? Actually, I'm sorry. That's not valid because you don't get a close below this low. This actually opens here, closes here. So okay, that's why that area is no good. But you see here, price hits that area, starts to move down, but then goes up into the next area here. So now we got our hit. So now what we're looking for now is we're looking for this move here to show us the price is now ready to go the other way. Okay, so let's see if we get that. And so when you look at this price structure here, let's see, I kind of missed it here. Let me just take this back one more time here. Yeah, my computer's really going goofy here today. Just bear with me for 1 second, guys, here. This was very close here, okay? So right there, price comes down and it just closes below this wick, giving us a change of character. Okay, so if you look at the bar here, let's make this a little bit bigger here. This is where the change of character occurs. And you could see here, if you hover over this bar, you could see that the low on this bar was 96,154. The close on this bar was 96,148. So it was just about a half a pip. Okay, but it did close below there. And so since it does that, now you have this refined area right here where you could set your order, right? So you would be looking to get in this trade right here. Your stop loss would go right above there. You want to put these stop losses like 3 pips above, right? To account for the spread. And then you're just going to target this low down here, okay? So let's just see what happens with this. Price comes in, gets us into the trade, right? Comes back a couple times, and then it comes all the way down to here, and it almost hits our goal down here, right? So this would be our invalidation zone up here, where we would get knocked out of the trade with that 1% loss if you're risking 1% of your trading account. And this, of course, would be where we had our take profit here. This was a 1 to 4 trade, so you'd win $4 for every $1 you risk, right? And so with this supply and demand trading, that's what I was showing you. You're able to get those 1 to 3s, 1 to 4s, 1 to 5s, and so you don't have to win as many trades because you're only losing 1% on your losing trades, right? But with this strategy, you should easily be able to win 50% of your trades, and that's going to put you in very good shape profit-wise. As long as you're using proper risk management, you're only risking that 1%, and you're letting your trades run. You're not jumping out of your trades just because you're in profit. Okay, so that was AUDJPY. Let's look at the other one I wanted to look at here was GBP. Let's see. Let's look at GBP JPY. This was the good trade for the week. This was the one that made us like 3.5% profit. Okay, so let's just take this back here for a second. Okay, so you can see here, we're looking at the market structure on the 4-hour. We're seeing this downtrend here, right? So if we scroll further back here, we see prices moving down. It tried to make a move up, but then it went right back to the downside. Okay, I'm going to make a short video after this showing you the couple different market structure scenarios you can have here. So we have this, we've identified a couple different areas here, right? We identified this area right here, and we also have another 4-hour supply area up here. Okay. Now, there is actually one right here as well. And this one here has no imbalance, right? So this one does lead to a break of structure. And so you could say that this would be a valid area right here because you do have some imbalance here, right? So let's just see what happens here. Again, just looking at the 4-hour time frame and not dropping down to the 15-minute or the 1-hour time frames. Okay, see how price goes right through that first area. So we have no chance to even look at it. Even if you would drop down to like the 1-hour, say, right, you could see price just goes right through that first area. So there's no reason for us to take a trade there. We obviously wouldn't have a limit order set there because that's not clearly not an extreme zone, right? So there's no reason for us to just get in that trade without waiting for the additional confirmation, right? So price goes right through that zone. Not only does it do that, it goes right through this zone here as well. And it goes up to this 4-hour supply zone here, which is the one I initially liked because there was all this imbalance here that needed to be filled, right? And again, even if we drop down to the 1-hour time frame, you could see here, price does not make any valid change of character to the downside, telling us it's safe to think about taking a trade here, right? It just goes straight up into the next zone. Okay, so again, just staying on the 4-hour time frame right here. Now we're looking for that change of character, right? So at this point, we'd be looking for this low here to be taken out. Now, if it goes higher, then we can have another low, right? So let's see what happens here. Okay, so right here, that low doesn't seem to be taken out yet. Okay, what happens here though, right here is you go higher. Okay, now you don't get a candle closing above this wick, but when you're looking for the changes of character for your confirmation, right? Whether it's on the same time frame or a lower time frame, drop down to. All you need is that wick. You don't need a candle close above there because we want to see rejection off of these areas because we want price to go the other way. So right here, when price goes higher, okay, let me just shut this off for a second, put this back on because I miss this stuff a little bit, guys. I'm not very good at seeing it. Okay. So there, price goes higher, and then it comes down, and you get the change of character right here on this candle. Okay, so that would be that wick right there. And that obviously gets broken, right? Now, when we're looking for this to get broken, we do need a candle close below here. But when we're just looking to identify where we want to put that change of character for a confirmation trade, for the confirmation for the trade, the wick is fine, right? When it's going the other way, the opposite way we want to go, right? So the wick was fine there. This comes down. Now you have this area right here, right, where you have the imbalance. So this would be your refined zone, kind of from there to there. So you would probably want to put your trade in right here, of course, and then of course your stop loss would go just about 3 pips above that high or so, right? And so again, we're just going to target these lows down here, right? We're just targeting lows. We're not making any strange targets. That right there in itself is a 1 to 4.2, right? Risk to reward. And so you could see here that on that next candle, price comes up, gets us in the trade, right? Now let's play it forward, see what happens from there. Right? Price starts moving away, comes back, we get another tap in, right? And then price moves away. And then this is what we're left with, right? Now, let's say that when price comes into our zone here, we want to drop down to the 1-hour time frame side. So there's our candle right there. Let's drop down to the 1 hour, right? We could see price come into the zone here, right? Pulls back, goes higher. There's our change of character, comes down, breaks that structure, causing the change of character. That identifies almost the same area right here for us, right? This candle right here where you have the imbalance, but again, you're going to have to put your high up here because those candles are close enough to your zone here that they're included in the order flow that leads to this, you know, supply zone being created. Okay, and that's why you have to be careful where you put your stop losses. You don't want to be too aggressive. I show you in my video yesterday, the weekly recap, how all three of the trades I took, I initially lost them all. And then I had to reread the market structure, see that either price, showed some imbalance, moved into another zone, or I just put my stop loss in the wrong place. Okay. So again, but on the 4 hour, you don't, again, you have to use these candles up here. You just can't use this small candle for the whole supply zone. If you do that, you'd get in the trade and then you'd be stopped right out of the trade. Okay, because price goes higher, right? You have to include the high of these candles here that are included in the consolidation. Okay. You're going to use the low of that candle specifically for your entry. Okay, but you have to use the other candles for where where your stop loss would go. Let's look at NZD CAD here real fast. Again, I'm just trying to take a deeper dive into the video that I did last night here. So on NZD CAD here, we see prices moving up, right? Could see price was moving down. We got this move to the upside here. So again, we have a change of character here, but then we have a pullback and then we have a second structure break here. This wick here gets broken by the bodies of these candles here. So we have what I call a 2x2, and that is now a confirmation that the trend has changed. I'm going to do another video after this showing you that. I just want to kind of get through these here. So we have a 4-hour demand zone here. We also have a 4-hour demand zone here. There's some imbalance here. So we don't know which one's really going to do what. Price comes down here. If we just stay on the 4-hour time frame, we see that price goes through our first demand zone. It closes below it, but then the very next candle goes right up. Okay. So at this point here, right, if we was to do a replay here, at this point here, you're looking for that change of character to the upside. So this would be where, you would need a candle to close above this area here to tell you that it may be safe now to identify a refined demand zone to actually for a confirmation on this trade, right? So let's see what happens here. Price goes up, right? And it breaks that structure, right? Now, actually, you actually get a wick here that even goes lower here. So now you can move your change of character probably down a little bit to here. Okay, either way, you get that break of structure to the upside, and right away I could see this refined zone right here. Right? There's an impulse candle up. We have a little bit of imbalance here. This would be the candle that we use initially to identify our demand zone, our refined demand zone here on the 4-hour. There's the entry. But again, we have to include the wicks of these other candles here. Okay, so our entry would be right here, right? Our invalidation zone would be down here. And then again, if we just target this high up here, no big deal. It's about almost a 1 to 3, right? As long as you get a 1 to 2.5, you're safe taking the trade. Anything below that, don't even take the trade, right? Let's just play this forward, see what happens. Price comes down, taps us in the trade, right? And then it moves up and ends right there. So this is a trade that you could potentially hold over the weekend. If you're going to hold trades over the weekend, it's not a good thing to do. You could just exit that trade on Friday right there in profit. If you do hold it over the weekend, it's a little more risky because, price could gap up or gap down on the open. So a lot of times what you have to do is you have to remove your stop loss for that open on Sunday night, and that's risky as well. And because normally when you get the gap up or down, price does adjust back to where it was. But again, I don't recommend you do that. I recommend you just get out of your trades on Friday and be done with it, right? Next week, we'll give you more trades to get in. You can get out of this, trade here, and still have like a 1 to 1.5, 1 to 1.6 risk to reward ratio trade. Okay, let's show you let's just see what does this do on the 1 hour here. So let's go back to the 1 hour. Right, price comes into the zone here, comes into the zone. Again, change of character is basically almost in the exact same place there, right? And when it breaks that, you have this little indecision candle right here on the 1 hour. You could use this, right, as your zone here. Take that trade. But again, your stop loss has to go down below these lows here. Okay, so I just wanted to take a deeper dive here into the weekly recap that I did yesterday, right? Just to make sure that you understand this. And again, the important part to understand is that, when price comes back into your zone, we're looking for a move like that, right? Move like that, or move like this, or move like this, so that we can then identify a a valid refined supplier demand zone. And again, you could drop down to the 1 hour and look for this. You can actually drop all the way down to the 15-minute if you want to. Okay. I tell you to use the 15-minute, right, in my supply and demand zone intro video. Okay. But again, it's up to you. When you drop down to the 15-minute, that's a little more riskier than dropping down to the 1 hour, which is less riskier, or just staying on the 4 hour and look for your confirmation on the same time frame that your supplier demand zone is hit on, right? That's the least risky of all, right? So the most risky thing you could do, I don't know if I said that right, the riskiest thing you could do, my use of the English language is not always very good. The riskiest thing you could do is identify a 4 hour supply and demand zone and just set a buy or sell limit right at that zone without waiting for any confirmation. Now, we do that sometimes when it's an extreme zone. I think that was the case here in GBP-AUD. Let me show you this here real fast. What was we at here on this one? Okay, so back here, we were looking at this huge move down here, these impulsive candles, right? Price was obviously in a downtrend, right, on the 4 hour time frame. We had identified this. You had a couple different areas here, right? You had this big move down. You had an impulse candle here, left imbalance. You had another impulse candle here, left a lot of imbalance. So what happened was this area here was already hit. Okay. But you still had the impulse candle here and there was imbalance here. So we originally marked this as an extreme supply zone and we just used the whole thing. Okay. So actually, this is the first part of it here. But because these candles are kind of included in the order flow that leads to this supply zone being created, they're all kind of included in consolidation here. So we put the top of the supply zone all the way over here, and that became an extreme supply zone because if you go to the left here, there's nothing else there. Okay. And this area here was already hit. This area here was already hit. So this was no longer a valid supply zone for us. It was already hit. We only want to trade from these zones once. That's it. So what happens here, you could see the price works its way up. And since this is an extreme zone, you could potentially just set your limit order right there. But that's the only time you can do it. That's the only time you can comfortably do it is if you are sure you have a valid extreme supplier demand zone on at least a 4 hour time frame. Okay. Now let's say you didn't want to get in there and you wanted to wait for an entry, right? You wanted to wait for a confirmation. Well, we could see here that we would need to get a break of structure right here, which we do get, right? But that really doesn't leave us a valid imbalanced area here to get back in at. We do have one a little bit further up. There's really no imbalance there either. So there's really no, all this price action is efficient. Okay, all this price action is efficient. You can see here there was imbalance back here that was filled. It is giving us a thin, there was a thin imbalance here, but that got filled. So all this price action right now is efficient. So there's no inefficiencies, and that's what imbalance means. There's no imbalance, right? So we can't really get in from anywhere there. But if we were to drop down, say, to the 1 hour time frame, okay, right? Price comes up, hits this area, right? And then we can see here, we get kind of this change of character right here, right? And with that, we do have some zones here. So we have this area right here, right? Which kind of price comes back, hits it. That's a lower area. I'm sorry, that's not one. So when you get this change of character here, you do have some imbalance right here. If you turn the indicator on, you can see there was some imbalance there. Okay, so shut that off. This potentially here could be a valid refined area. Again, you'd have to use these wicks here, right? So it comes down, price comes back in, and then makes a move down here. So you do have an opportunity to potentially take a trade here if you drop down to the 1 hour time frame, right? So we could see we want to enter there, right? If we use this low over here, that's like a 1-to-156, doesn't quite hit it, and then moves up. Okay. So again, you could potentially find a entry on the 1 hour, even though you don't really find one here on the 4 hour. Right? Because there's no inefficiencies here, you really don't have an entry. And also, like I'm saying, because this is the extreme supply zone up here, it's definitely a valid extreme area, then you could think about just taking that trade when that gets hit and not even wait for confirmation. But that would be the only time you could do that. Okay, guys, any questions on this video? Like I said, I'm going to try to put all these videos on the same page, but I'm also going to do a quick video after this, just showing you a little nuance when you're trying to identify the market direction. Have a great day.